JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 8th of June 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff, guys. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, guys, so before we jump in, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to check us out here on jfdbank.com and click on the research tab right there on the top. So now then, oh, I can see in the chat room here, good morning Erica, good morning Evu. Yep, I can see you there and chatting already. So yep, hope you're having a wonderful start of Tuesday. But now let's jump into the charts, guys. So the first one I want to pick up here is Nikkei 225. Just a quick update. To be honest, not much has changed since yesterday. The only thing that we declined a little bit here, but still remained within the, or I should say in between the two lines. The short-term upside support line taken from the low the 13th of May, and the short-term downside resistance line taken from the high of the 6th of April. So basically, long story short, for now, we're just kind of waiting until we get a clear break through one of these lines in order to consider the next short-term directional move. So at the moment, it's going to be quite interesting to see where this one's going to end up going. But for example, if it breaks the upside line here and then falls below the 28,711.10 zone, approximately around here, this would already place the index below the 21-day EMA, and potentially more sellers could start joining in here. However, of course, we'll be very careful near the 100 EMA, 100-day EMA here shown as the green line, because it did act as a good area of resistance and support in the past as well. So, but if that gets clear, then of course, yes, further declines could be possible. However, we should not exclude the upside scenario yet, because we could still see a break of this downside line. However, as I've mentioned before, I would actually prefer to see a push above the 29,519 territory first, not above the yesterday's high, for example, but above this barrier, just because this area did act as a good area of support, then resistance, then support again, then resistance. So basically, that's why I'm keeping an eye on this little area right here. Shanghai Composite, so drifted a little bit lower, and it's still trading in the red. The index is not. The index is still kind of, I would say, on the positive side, because we're still hanging above this upside line. However, we have around 50 something minutes left of trading here on the Shanghai Composite, so that's why we will be careful, because if by any chance this eventually ends up being below this upside line, and then even below this hurdle, below this 3,562 territory right here, now this is where it could become a little bit tricky for a few buyers, I would say, because this could increase the chances for Shanghai Composite to go for a slightly larger correction. And the reason why I'm saying correction, because we're still trading above this upside line taken from the low the 9th of March. So keep that in mind. But at the moment, we're still hanging slightly above this, or I should say even actually bang on this upside line. But even if we stay above this somehow, if we manage to remain above this, I mean, still I would like to see that push above the 3,626 territory right here in order to go for some higher levels. But yeah, guys, at the moment, it's a little bit of a tricky one here. So let's see how this is going to end up being today, where this daily candle is going to end up sitting. The DAX, the German index, DAX. So yeah, quite interesting. And this is what I said to you recently. And actually, I keep repeating this this idea all the time. And the idea is, of course, that once we go for a new all-time high, but then the daily candle eventually closes below the previous all-time high, then there is a good indication that we might see maybe a bit of a corrective move lower here. So, yep, I mean, we did get that. Currently looking at the cash index, we see that the price is trading not far from the closing price, so below these two barriers here. So yeah, let's see if this idea is going to work out again. Certainly, it will be quite interesting to see if it does. If we start drifting here to the downside, for example, we start pushing somewhere below this little hurdle right here, which which marks the high of the 3rd of June and is near the opening price of yesterday. And that level is around the 15,657. If that gets, if we get a drop below that, maybe, just maybe, we could see, like I said, this idea working out where we could see maybe a bit of a retracement here to the downside. Probably these sellers should not get way too excited yet, because we still have a bunch of upside lines here to overcome. So that's why if we would aim for some lower levels, we would really go step by step on this one. And for now, I would say that yes, keep your eyes on some of these levels. So for example, for the downside, keep your eyes on this 15,657 territory. If we drop below it, then we could potentially see maybe a bit of a decline here, a correction lower, I mean. But if this area continues to provide support, then all eyes are going to be on the previous all-time high, and the yesterday's all-time and the current all-time high, which is around, let me just zoom in here a little bit, the 15,732 territory, approximately around here. If that gets cleared, of course, higher levels could be met, and yeah, potentially more buyers could join in. A quick update on DXY, the dollar index, and yeah, so far it's a bit of a mess here, I would say. So we drifted lower yesterday, failed to remain above the 21-day EMA and above this 90.23 zone. We are now drifting lower. However, there is still a chance for the bulls to step in somewhere around this upside line. Will that happen? Well, we'll just have to wait and see, guys, because this is going to be quite interesting to see if this upside line does provide any support. If it does, then yes, I mean, a nice rebound here could be possible again. However, for the downside, if you want to look at some lower levels, well, at least wait for a drop below the 89.68 zone right here, because this way, and to be honest, I mean, not only a drop, but also a daily candle staying below it, because you can see that we had these false breakouts here, and that's, by the way, the lowest point of February of this year. So we had these false breakouts, but we didn't really see the daily candle staying nicely below it. So that's what I need in order to consider a move lower. So coming back to gold, gold is trying to make its way higher. So the idea that I talked about yesterday, where I said that maybe we could see a bit of a corrective move lower here, but the idea was kind of more revolving around the daily candle remaining below the 1890 territory. And yesterday we were still below that. During my morning video, we were still below this hurdle. So this kind of was keeping the idea still of seeing maybe a larger correction lower possible, but as you can see, it ended up pushing back above the 1890 territory and stayed above it. So now, to be honest, it's an interesting situation here. I mean, from the very short term, very short term perspective, I mean, we do have this little let me just zoom in here a little bit. We have this little downside resistance line right here, which continues to be kind of respected, I would say. And although we had a break above it, still kind of it is providing resistance. Still, the bulls are kind of not really pushing the commodity further above this downside line. However, it's only the beginning of the day here in Europe, so yep. Let's see how this is going to play out. I mean, we still have also the US session to go through. So for now, I would say that given that we already had a move higher, if you want to aim for some higher levels, then, well, let me just actually recycle one of these lines here. If you want to go for higher levels, probably at least wait for another push above yesterday's high near the psychological 1900 level right here. And if we do that, then it increases the chances for a possible move towards this 1916 territory, which is the current highest point of June, and then of course we would take it from there. For the downside, well, probably I would like to see the daily candle at least staying below the 1890 territory in order to maybe consider a bit of a corrective move lower here. But of course, we'll go from what we see. I mean, and at the moment, I would say yes, that's going to be the little kind of scenario here. If we see the daily candle dropping and staying below the 1890 territory, then I'll consider maybe a bit of a larger correction to the downside here, maybe towards this upside line. But yeah, as I said, if we climb above the yesterday's high near the 1900 level, then, well, I mean, we could potentially aim for some higher levels. At the moment, like I said, it's a little bit of a tricky one here, but we'd rather be safe than sorry, guys. So we'll wait for a violation of one of the levels first. WTI oil, so drifting nicely to the downside. And look at this yesterday's candle here. I mean, nice, beautiful little kind of doji here. And yeah, I mean, this kind of is resulting now in the correction lower. However, this is what I said to you yesterday. Yes, we could see that correction lower, but if this hurdle somehow, the 68 territory, provides decent support, then yep, another possible move higher could be well, another move higher could be a possibility here. So long story short, basically for now, keep your eyes on the highest point of March near the 68 territory. If that provides decent support, then yes, a nice rebound here could be possible. However, if it gets broken, this is where I'm gonna end, where I'm gonna start being a little bit neutral, because this whole area here for me would be a tricky one, because it might drift lower still. It might find support near the 21-day EMA and then maybe rebound. So that's why I will be a little bit more on the neutral side if it drops below the 68 territory, but still remains somewhere below, above the 66.40 zone. But if that 66.40 territory gets violated, well, this could lead to a bit of a larger correction here to the downside. Now jumping into Bitcoin. So Bitcoin, okay, drifting nicely to the downside. So yep, I mean, we violated first the upper side of the triangle, and now we're violating the lower side of the triangle. So basically we can say that this triangle didn't really work out nicely. So but we took that into account. We always have to do that. So so now basically we can get rid of this and focus on something else. So here, for example, the idea now is, of course, to keep your eyes on the on this little short-term upside line, which is getting broken, well, which got broken yesterday. We are drifting now below the, let me just grab a line very quickly. We're now drifting below this hurdle right here, the low, the 30th of May, near the, well, what a beautiful number, 33,333 territory. So we're shifting below that, and yep, if we stay below this hurdle, then my next target is the psychological 30,000. 33,000 territory, which was tested, which is tested from, well, was tested here on the 19th of May, and kind of marks the lowest point of May. So basically, if we continue to trade below that 33,333 territory, well, keep your eyes on the on some of these lower levels here, and especially that psychological 30,000 mark. If we climb back above the subside line, maybe we could start looking at some higher levels, but to be honest, now looking at this picture, I would at least like to see a push somewhere above this area, 36,812 zone marked by yesterday's high, in order to consider slightly higher levels. But even then, I will be very careful near these two EMAs here, the 21-day EMA and the 200-day EMA, together with the 42,101 zone right here. And then we'll take it from there, guys. Ripple. So Ripple is drifting also to the downside. So still not really near the well, coming close, of course, too, but still not near my level here that I talked about, the the 0.7910 zone right here. So basically, as I'm still looking for that level, still waiting for a break below that level in order to get a little bit more comfortable with the downside, because basically at the same time we would be placed below the 200-day EMA here, and potentially more sellers could join in. So for now, yep, we're drifting a little bit lower here. There are indications that we could see a further decline, but I'm keeping an eye on this 200-day EMA first, because if and because yeah, this is the option for me to kind of get a little bit more excited with the downside, because again, so far the 200-day EMA did do its job. It did provide support, and for example, also keep in mind that what could happen here is, for example, if we could drop below the 200-day EMA, trade for a while, but then let's say at the end of the day we could drift back up and stay above this 200-day EMA, like we did here, for example, back on the 23rd and the 24th of May. So yeah, and then yeah, we could take it from there, guys. So for now, long story short, keep your eyes on this, and let's see if we can see a further push north. Oh, sorry, further push south. Jumping into a few pairs, AUDCHF. AUDCHF. Haven't looked at this one for quite a while, but this one is quite interesting because so far the idea is kind of working out. So I mean, this barrier, the 0.6981 zone, is providing resistance. As you look how well this is playing out. This level, it was previously seen as a good area of resistance, then support here as well, then also again support, and then back to being resistance again. So in other words, if this continues to provide resistance, yes, another slide here could be possible, and especially if it continues also to trade below the 21-day EMA, below the 100-day EMA, with which the level here this coincides. Even if it pops above it, there is still kind of an opportunity for the bears to step in here near this downside line taken from the high of the 18th of March. So, and that's why my upside scenario is from around here somewhere, this 0.7033 territory. So yeah, if that gets broken here and we see a push above the 0.7033, then yep, higher levels could be met. But at the moment we are still below this barrier, below this downside line, below the two EMAs here. So there is a good chance we could see a drift back down. But again, let's see how that's going to play out. Now USD CAD. Now this one is interesting. It's showing willingness to travel higher here, although it continues to trade below this downside line. It is it is still near this downside line, not far from that 21-day EMA. So in a way, there is a possibility we could see this one pushing higher. And also, given that oil is drifting south right now, then yep, we could see USD CAD picking up the pace here and maybe traveling north. However, there's always basically from the technical side, we still need to see a break of this downside line, a push above the 21-day EMA and a move above this 1.2142 territory, roughly around here, marked by the high of the 27th of May. But if that's not the level that you would like to keep an eye on, if you want to keep an eye on the highest point, the current highest point of June near the 1.2133, yes, you can do that. But yep, at the moment, yeah, still, if we travel above this barrier, still be very careful. Go step by step to the upside, because overall, I mean, you can see that we are still stuck. I mean, below this downside line here, this taken from the high of the highest point of March here, so of 2020. I'm not even gonna draw it for now, so unless we see that pop higher. But yeah, guys, I mean, this is an interesting one here. I'm not saying that this is where you need to start getting your buy positions. No, I mean, you do whatever you're comfortable with. The only thing is that for me personally, I need to see a break of this barrier first, because don't get me wrong, I mean, if this downside line continues to provide resistance, then, well, I mean, another slide here could be possible. The only thing is, with the downside, I would prefer to wait for a drop below the 1.2013 territory right here in order to get a little bit more comfortable with the downside. So keep that in mind, guys. GBPAUD, haven't looked at this one for quite a while, and yep, I mean, let me just kind of actually get rid of some of these things here. I mean, this highlighted area, it is somehow providing that support. I mean, this whole area is providing support. I mean, but I'm gonna get rid of it just because it's not an ideal one. Certainly, a few levels have to be adjusted as well here. So, and maybe slightly different approach has to be taken. So. For now, I mean, overall, we can see that we're trading above this upside line taken from the low the 7th of January. So yeah, there is still a chance for the pair to drift higher, especially if it continues to trade above the 21-day EMA right here, shown as the yellow line. But if that gets broken, then of course this could lead to a larger correction to the downside here. So basically, there are a lot of factors to kind of take in. I mean, yes, it looks quite positive still. Yes, we're still trading above this little short-term tentative upside line here, taken from the low the 14th of May. But if this gets broken, then we see the price, the rate falling below, somewhere about below this little territory, which is the current lowest point of June, near the 1.8217. Now this is where maybe more sellers could join in. For the upside, I will take a very, very conservative approach and wait for a pop above the 1.8453 territory in order to aim for some higher levels. Euro GBP, very quickly on this one, just a quick update. I talked about Euro GBP already, so basically I said to you yesterday as well that keep your eyes on this barrier here, the 0.8582, because yes, we broke it to the downside nicely, but look at this, I mean, false breakout again. So that's why for now, I mean, we're not really doing much with this pair. We're just waiting, and we need to see the daily candle to remain below this hurdle in order to go for some lower levels. For the upside, we need to see a break and a daily candle staying above this downside line, above the 21-day EMA, in order to get a little bit more excited with the upside. Now jumping into Euro TRY, so one of my favorite ones that I keep watching. So yep, we had a nice little correction here to the downside. We're coming close to this upside line drawn from the low of the 16th of April. So let's see if it holds again, and if we see a nice rebound from this upside line. For now, I would say that yes, we're cautiously bullish. But for the upside, I would need to see at least a move back above this hurdle here. The high of the 3rd of June, near the 10.60 territory right here, 10.6061 approximately around here. If we climb back above it, then yes, I'll aim for the current all-time high near the 10.69 or even above that. But for like I said, for the downside, we need to see a break of this upside line, and then we'll slowly go to the downside, because we would still have to overcome the 21-day EMA. But we'll get to that point if we see that break of this upside line. And finally, EURUSD. So still, or actually I would say we moved nicely back above this area, above this hurdle, above this 1.2161 territory. I spoke about this, and I said to you yesterday that even if we climb back above it, for me the upside scenario could come probably on a break of this 1.2266 territory, just to be a little bit more on the safe side, because I mean we could start drawing some downside lines here. The chart could get a little bit more messy, but that's why I mean I have my preference here for the upside only from this 1.2266. I do understand that we could be missing out on a bit of territory here, but I'd rather be safe than sorry, to be honest. I mean that level is the highest point of May, and then yeah, we could take it from there. For the downside, I need to see for the downside, I need to see a move back below this 1.2161 territory in order to get a little bit more excited with the downside again. But I mean, so far we're back above the 21-day EMA, so that's why we will remain very careful. And with the downside, we could yes, we could. I would say, what's the word for that? Again, I'll repeat myself, guys. I mean, we need to be very careful in situations like these. We need to be very careful. Again, some of you probably have also drawn this thing here. Let me just quickly put it on the chart. So it's not an ideal one, but yeah, just let me put that on the chart just in case. So something like this, basically. It's like it's almost like a nice falling channel here. Like I said, it's not an ideal one, and I mean you could try to keep an eye on it, but don't really focus on it too much for now, unless we continue to drift lower here, and we or not continue to drift lower, but if we fall back below this 1.2161 territory, then yes, we could maybe keep an eye on this little falling channel pattern. So guys, that's it for the session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, and thank you very much for the comments, guys. I really, Evo and Eric, I really hope you enjoyed yourselves in the chat room there. To be honest, that's great, guys. I mean, wonderful to see some activity here. So thank you very much for watching and listening. Thank you very much for your views, your likes, your comments, guys. I really appreciate that. So have a wonderful trading day, and I'll see you later. Bye-bye.